Welcome back to the channel. Today, we're going to be looking at Tesla as an investment.
Okay.
And, it's really a fascinating company with a lot of moving parts.
Yeah.
We're going to be looking at, how they're performing, how they're positioned in the market, and some things you should really consider before you jump in.
Sounds good.
So, right off the bat, Tesla's showing some pretty impressive growth.
Yeah, they really are.
I mean, 8% revenue increase year over year.
Yeah.
Profits are up
Hmm.
17.3% in the last quarter.
That's right.
They're generating a ton of cash
Yeah,
and keeping their debt low.
they are.
So on the surface, it's like, wow,
It's a really pretty picture financially.
yeah.
Yeah.
But of course, there's always a but, right?
Right.
That success is kind of baked into their stock price already.
Okay.
So their price to earnings ratio is sitting at 88,
88.
which basically means investors are expecting them to just continue exceeding expectations. It's almost like they're betting on the future
Yeah.
rather than,
Exactly. And a high PE, like that, for those who aren't familiar with that,
yeah.
it basically tells you how much you're paying for every dollar of the company's earnings.
Right.
So a high PE implies high expectations for future growth.
Uh-huh.
Any stumble.
Yeah.
And that stock price could take a pretty big hit.
So it's not just about what they're doing now. It's about, can they keep this going?
Right. Can they maintain this momentum?
And they're not just a car company anymore, are they?
No, not at all.
Branching out.
They've got their energy storage solutions.
Yeah.
Their solar solutions are becoming major players.
Uh-huh.
And then you've got the constant development of new EV models.
Right.
So that adds another layer of diversification.
So it's spreading the risk a little bit.
Exactly.
Yeah.
It makes them less reliant on just one product.
Okay, so they're growing, they're diversifying. But what about the competition?
Yeah,
I mean, the electric vehicle space is getting pretty crowded.
it is.
It's not just Tesla anymore.
Well, you've got traditional car manufacturers
Yeah.
that are finally taking EVs seriously.
Right.
And then you've got these startups
Yeah.
like Rivian and Lucid coming in.
With fresh perspective.
With fresh perspectives, exactly.
Interesting technology.
Yeah.
I mean, Tesla's got a head start,
Right.
with the battery technology.
Yeah, their battery tech and their autonomous driving systems.
Well, they can't get complacent, can they?
No, they can't afford to rest on their laurels at all.
Especially with companies like Rivian. They're really targeting
Yeah,
that adventure.
the outdoor market
Yeah, the outdoor market.
with their trucks and SUVs.
And then Lucid is really going after that.
The luxury end.
Yeah, that luxury buyer.
Yeah, pushing the boundaries on performance and range.
So Tesla needs to keep innovating
Absolutely.
to stay ahead.
To stay ahead of the curve.
And, one of the things I think about is, manufacturing.
Yeah,
They're ramping up production,
they are.
but they need to really kind of, I think, streamline their processes
Yeah, improve that efficiency.
to meet that demand because the demand is growing so quickly.
And think about it,
Yeah.
if they can produce more cars faster
Yeah.
at a lower cost,
Uh-huh.
that gives them a huge advantage.
It's a race to the top.
It is.
And, we touched on this, but I want to kind of dive a little deeper into the valuation. That stock price is high,
Yeah,
which reflects all that potential,
it does.
but also implies some risk.
Right. Investors are basically betting on Tesla continuing to dominate this EV market.
It's a big bet.
It is.
And they're also, they're revolutionizing the energy sector.
Right. If they deliver, the stock could skyrocket. But if they fall short,
Uh-oh.
the price could plummet.
So high risk, high reward.
High stakes game.
And that's where you get these mixed opinions from these analysts.
Right.
Some are bullish on Tesla.
Yeah, they believe Tesla's on track to disrupt entire industries.
It's a big claim.
It is a big claim.
But then you have others that are more cautious.
Yeah, they're pointing to that high valuation and the fierce competition as potential red flags.
I think what's so interesting about this is both sides have valid points.
They do.
I mean, this is not a clear-cut case.
No.
So I
Yeah.
think, for anybody who's considering investing in Tesla,
Yeah.
they really need to understand both the potential and the risks.
Absolutely. It all comes down to your individual risk tolerance.
Right.
And your investment goals.
And speaking of risks, Tesla's earnings,
Yeah.
while they are mostly stable,
Mm-hmm.
thanks to car sales and energy products,
Right.
they also rely on things like these regulatory credits.
Yeah, these credits, they come from government regulation that are designed to encourage the production of electric vehicles.
So it's like an incentive
Exactly.
for companies to get into this space.
Yeah, and for companies that don't meet certain environmental standards,
Yeah.
they're required to purchase credits.
From companies like Tesla,
Yeah.
who exceed those standards.
Yes.
Right, that's right.
So Tesla is actually making money by selling these credits
to other automakers.
Other automakers.
Who haven't fully transitioned to electric vehicles.
Wow.
It's been a pretty lucrative source of income for them.
Yeah.
But it's important to note that these credits can fluctuate based on government policies and the pace of EV adoption by other manufacturers.
So it's not a guarantee.
It's not a guaranteed source of income in the long term.
So investors need to factor that in.
Absolutely.
When they're kind of assessing.
When they're assessing Tesla's financial stability.
Yeah. It's a reminder that while Tesla is a leader in the EV space right now, things are changing.
The landscape is constantly evolving.
And their ability to adapt and maintain that competitive edge is really crucial.
It is.
And it brings us back to that key question.
Okay.
What is the one metric that investors should be keeping a close eye on?
Yeah. Is it production capacity?
Is it their innovation in battery technology? Is it their ability to navigate the competition?
Or is it something else entirely?
Yeah, I would say it's a combination of factors.
Yeah,
You want to see them continuing to ramp up production.
Yeah, to meet that growing demand.
Exactly. You want to see them pushing the boundaries of battery technology.
Extending that range, reducing costs.
Absolutely. And you want to see them staying ahead of the competition.
Through innovation strategic partnerships.
Expanding into new markets.
Tesla's success really hinges on their ability to execute on all these fronts.
Yeah.
It's a very complex situation.
But it is a complex and dynamic situation.
And investors need to be informed and be prepared for the long haul.
Absolutely.
Because, let's be honest,
yeah,
investing in Tesla is not for the faint of heart.
It's not.
It's high risk, high reward.
It's a bet on the future.
Right.
On the belief that Tesla will continue to revolutionize these industries.
The automotive and energy industry.
Exactly.
And for some investors, that reward is worth the risk. But it's a decision that requires
careful consideration,
diligent research,
and a clear understanding of both the opportunities and the challenges
that lie ahead. Well said.
Thank you.
And remember, this is just a starting point.
Right.
For your own research.
This is not financial advice.
Don't make any decisions based solely on what you've heard here.
Do your own due diligence.
Consult with financial advisors.
Stay informed about these markets.
Knowledge is power.
It is.
Especially when it comes to investing.
Absolutely.
We'll be back soon with another episode.
We will.
Exploring a different company or trend.
Looking forward to it.
That's shaping the future.
Yeah.
Until then, keep learning, keep exploring.
Absolutely.
And as always, happy investing.
To you as well.